Welcome back to this channel. MRNA is on fire. $30 moves up and down. Crazy. Been providing some really good trading opportunities, and I would like to thank everybody for commenting and following. It's entertaining for me to have conversations and have our perceptions on where we think Moderna is going and why. So let's jump into that. All right. So I want to show you a quick video of something that I did mention about what Moderna was going to do, and let's jump into that. So if we do a trade, if we do end up trading fast and hard into this area in the morning from, let's say, 9:30 to about 11:30, around that time frame, we hit that 433, 439, depending on which day it is. Buy. That's a buy signal for me, and I will be buying it. And the way I'm going to be managing my risk is waiting for candle closes. The candles will have to close below this line, on a 5-15 1 hour basis, and that's when I'll decide to exit, and I'll do it manually. So there you have it. Right, we were anticipating a flash crash, not a flash crash, but a rapid, hard move down to a specific support area, and as you could see, when we jump into the charts, you'll see how we executed that, how we made money off. If you didn't make money off of that, then you really need to take a look at how you're finessing the market and the fundamentals you're using to trade. You can follow our short selling series and our gap trading series. That will give you a lot of good information there on how we pull profits from the market on a regular basis. Before we jump into the chart, remember, this is not financial advice. This is for entertainment and educational purposes only. Our fundamentals for gap trading is we need institutional participation. Definitely banks and hedge funds are buying Moderna. That's why we're in it and trading it. The deal is the gap fill. We always go over what the gap fill looks like in our videos. And we also look for patterns. Patterns are bull flags usually. We also look for breakdown candles that we trade off of. We always go over these things in our videos. Risk management, 0.5%, 1.5%. Moderna is an exception. We're doing 3% because it moves $10, $20, $30 at a time. We need to give it that room to breathe. Important to be profitable. So you need to be able to stomach that. If you can, you will make money trading Moderna. So let's jump into the chart. We have a lot to talk about. Let's flip it over here. All right. There we have it. We have Moderna on the docket. We took the day off yesterday, so we missed. So this will be a little longer video than normal. So, go get a coffee, sit back, have a beer, relax, and, let's do some charting analysis together, shall we? So as discussed in my previous videos, there were a few scenarios. One, and which one happened here, would come hard and fast down in this area, right? I said this area. And that would be a buyer here, and I did buy here. We went through it, but we also buy at this area. So the open, let me just pull up my chart. So we look for gap fills, and so we bought here at 422 is where we bought, right? We averaged out, and then we got our $4 move when we retested here. That's how we trade it. You have to finesse it. And we do talk about this, quite often when it comes into areas of support and or resistance, it'll come in and spike through it, right? It spiked through it here. And when it came down here, right, it spiked through this area of support and then it ripped back up here. So you have these moments where it's not a perfect science. Sometimes, it bounces exactly on it. Here we had two bounce exactly on it. So you need to be prepared to adjust your trading strategy according to what the market is doing and telling you. That's why it's important to know that for the low of breakdown the low of break up candles are important entries. We highlighted this. You can go back in our videos. Maybe I'll take a second here to show you, why I drew this line here. But there you have it. We came and tested this again here twice. So now I can remove this line. It's not important anymore. It came to that area already twice. It's not going to be the same going forward, so I don't care. I don't. But the area that I do care about now is this area here, which is 420. Haha, happy 420. I do care about that area. So just to talk about what's going on here, we did in this scenario here, we did talk about if we gapped up and come into this price, we would be buying here. That it didn't do that, right? So when I do comment and I do give my personal opinion on where it's going, and my perception at the time is that we're going to come down here before we go below here. That was my perception. It's still valid because we haven't reached here yet, or up here. So that's still the case. I think we're going to test new highs before we're going to go lower, but we are tilting on the bearish side because we are now. This is now acting as resistance. So we tested, failed, tested, failed. So we're going to have to wait and see what tomorrow brings for us. We do have this break down candle, so we need to remove some of these things because they're not important anymore. So I need to go on a daily. Now, I always clean up my charts because I always want the most recent areas that are important to me. And because we're heading to new time highs, I have this on a daily. I want to tag the top of this breakdown candle, the top of this breakdown candle. And then for areas of support, areas of buying intraday, I want to tag these bottoms of these break up candles. Okay, and even I guess here is a top here of a breakdown candle. So those are important areas. Now that we've established that, we can start zooming in. We can bring it to the 15-minute chart, and we can add. So when we open, we just blast it off, right? So this is obviously an important area. So those are important areas that we need to follow this area. So if you want to be patient, in the morning, today morning, we had a breakup candle. It didn't really provide an opportunity to buy. There's no gap ups. We didn't gap up and then test it here and then take off, or gap down, tested this and went down. We didn't do that. We just simply traded up. It is what it is. It doesn't really provide you for a good trading opportunity. What happened today, right? We came close to the highs here. We didn't test it. So the market has something else in mind for us. It may try to come back and test this again, right? The longer it kind of makes its way here, right, the more it's building pressure to move higher. That's the case, right? Or we can, the next scenario, if there's more juice in this, we can again gap up, and as soon as we start closing like this on a 5-minute, 15-minute, 1 hourly basis, right, we form a bull flag. It's going to set up energy for that move higher. So this happened right over here. It happened over here. So this is what we're looking for, is a period of a half an hour, 2 hours of it hanging out at that range, right? So it hung out here too for some time. And then what it does, it may take a day or 2 or 3 days, right? There's some choppiness involved, but sometimes you can get some nice intraday setup. This particular setup, gave you $40, $50 move. Just fantastic. But that's what we're looking at. So at the moment, it broke down. We failed. So we do have, a lower high scenario. So if there is maybe some intermediate bearishness, but we have to wait and see how we open. How we open really sets the tone for the day. As you can see here, we had the gap up and go. That set the tone up for a bullish run. Here we had a breakdown candle, which set up for some follow through here on a sideways bearish flag. We've popped through some of that daily intraday resistance, and we almost tested this high. So what we're looking, this is, I'm sure, what you want to know is, well, what are we doing tomorrow? So this is important, and this is how we trade always. And we did this. I'm just going to jump to NVIDIA because that's one trade that we did today. We bought 200 shares on NVIDIA, and we did the gap trade. We did the gap trade. It worked perfectly. And let's maybe jump in on a 5-minute chart here, and let's just zoom in on that intraday. So here you have the close, the 21st, and then the open here at 9:30. And the first 5 minutes, we went straight down and tested this right here at 221.26. So we bought here at 221.75 is where we got in, and then we were looking for a 1% move. We bought 200 shares, right? And then we did the, it got $2 here. We just held it. When we had our order in for 223.75, we executed that. So that's $400 day, and that's how this strategy works. We have to open and come into the number immediately, and that's the only way that it works. The way that we manage our risk is, well, I'm on a daily chart, but let's go flip it back to 15-minute chart. Oops, it's always one. Sorry, let me just remove some of this stuff. So we're always only looking to risk, a percent, which would be $2 if we got at 221.75 at 220.75, right? So if we start closing below here is where we would have so it was maybe a bit more. It was a $4 risk here, a little bit more, but we would have found that out pretty quickly. But as if we were to be just kept going down like this, we could have used this as our last stand, added our positions here, but yeah, that would have actually been more. I didn't take that into account when I did that trade today. I saw this setup, and I know that it works 80% of the time, so I was just willing to risk it. That was a $4, so that was a 2%. So a little bit more, but you need to use your judgment. That would have been my last stand if we would have started closing below here. But I know these are, funds that are bought by hedge funds and banks. So I know there's support and buying behind this, these types of stocks. So that's just an example that I wanted to show you here. If you are more conservative, you can do the 1%, right? You can put your line here to 220.75. Yeah, the 1% worked even here, right? So if we do it close below this candle on a 15-minute or an hourly basis, you would just go in manually and exit out your position. So let's go back to Moderna. And what are we doing tomorrow? Again, we gap up here. We might have a gap, and go, which is super annoying. And then my most uncomfortable trade here is when it gaps and goes. But if it pull back, I'm gonna buy it because I need to, it's part of my self-analysis, my self-work that I'm doing is when it gaps and goes, I'm gonna try to get in here on a pullback on a 5-minute or 15-minute candle. My perfect setup that I'm ultra comfortable with, right, is we sell off immediately here, because then I can set my stop down here. If we start closing below here, right, if we're hanging out here for the rest of the day, I know that there's weakness, but at least if we go here, then I have the whole day for it to chop up. That's a possibility. The next one is if there's weakness, we could open here and trade up here. Then I might if it opens at 423 and then it pulls up here and fills the gap to 427, 428, this could be a potential short idea. That is my least favorite scenario here, because Moderna is known to rip pretty hard and it can just keep going. So that scenario is my least favorite. Finally, it could open right back at support here, and then again that would initiate some buying here at the first touch here at this area. So those are the three setups. I'm still thinking we're going back to all-time highs, even though we're on this pullback / consolidation period. And that's my analysis. Hopefully you enjoyed it. I know this was a little longer. Please like, subscribe, comment, and hopefully you learned something. See you tomorrow.